Hello and welcome to Wyckoff Training Academy. Yesterday I had recorded a video, but due to some sound problem, it was not. I think certain people face sound problem. So now, one second, let me. I'll bring up Euro USD. So now, some like okay, welcome to Wyckoff Training Academy, and this is a session wherein one second, let me check my mic. Yes. Okay. Hello. Hello, hello. Actually, I have changed my hardware, so that's the reason I am facing problem. So if that is the case, then please do let me know with this main thing. So now I will talk about Euro USD and FCPO because in these two markets I got trade. This was a trade, a buying opportunity now, and this resulted in like let me hide this thing. It is 1:10. 1:11 approximate. Price went up till this particular level. And then after that, this was a level wherein price retraced and then uh, it came around this particular level and bounced back. So now there are multiple things in this particular indicator. First, let me go with 206. You have this one, trade setup one, trade setup two, which is trade setup one is key zone, trade setup two is liquidity hunt. Okay. And after that, you have Wyckoff accumulation and distribution. So either of any you can use. And after that, if you only want to use 213, I got a very good. This is something which is very closer to my heart because this is something wherein I have worked a lot to gain to get the market levels so that we can trade based on this thing. So it is not the case that like I have made many indicators. Which one is your favorite? It is just like asking someone you have three children and who is the one you love the most. It is not something which is that because I want to deliver and I like to trade based on applying different approach so that my trading would be consistent over the or my profit earning would be consistent over a period of time. So having said that, I got question pertaining to 208. So let me hide everything. Okay. So this is the normal indicator which would look if you are unchecking everything. It is market type with index and all market. Index is something which is related to when you're Nasdaq or NSE or any exchange. Your like index means index. All market means any instrument, any stock, any commodity, any future market. So you can apply it. But what I do, I normally use index on so that I don't get any problem because index works on all market as well as index. If we apply all market, it will not work on index. It will only work for stocks, commodities, and futures and other things. So that is the reason I keep index so that I don't get any issues. And by default, it comes with index setting. And after that, now how to use and how to assess whether the market is what this entire pyramid or entire histogram is offering. So first thing first, this indicator is made by David Weiss, the late David Weiss. And the main intention of this indicator is to understand which side has the greater power to pull, either supply or either demand. So please keep one thing in mind. The red histogram refers to supply, the green histogram refers to demand. Okay. So having keeping this thing in mind, and you have one OS and OB. OB stands for overbought. Whenever you use anything like RSI, you have certain overbought position, you have certain oversold position. So this is overbought, or this could be oversold, or vice versa. Many people have many different kind of interpretation to it. So in this context, in this when it comes to this Weiss price and volume oscillator, because I have applied oscillator into it, that is the reason I have mentioned oscillator. So basically, it's a combination of 3 to 4 indicators, which is giving you a outlook of the market, whether the market is going has a potential, or is there any demand to take the market upwards, or is there any demand to take the markets downwards. This is the simple main crux of this indicator, to show us whether the demand is greater than supply or supply is greater than demand. So in that case, if supply would be greater than demand, price would come down. If demand is greater than supply, price would go upwards. So understanding this also, this histogram is, it will take some time for traders, but given the, if you're following along all the videos of mine, you would gradually understand the main how to use this indicator. And once you understand how to use this indicator, you would not go for any other indicators when it comes to oscillators or other kind of thing. Because if you are able to assess volume, because this is pure volume, this is something, this histogram is pure volume. It is like normal volume indicator was this kind of indicator, but wherein we are not able to identify whether market is going upwards or downwards, whether demand is greater than supply or supply is greater than demand. But by way of observing market in this manner, we can assess that if there is red, then supply is evident, and if there is green, the demand is evident. Now, how to correlate this thing? So there are two kind of things which we should keep in mind when we are using this indicator. One thing is, it is relative, and we have to look or study them or use this indicator in terms of correlation. So there has to be some relative analysis to it. Like for example, if I zoom out, I hope you people are able to see. This much is enough for me, I guess. So now, if you see, if I draw a line of corresponding to red pyramids, I'm taking these peaks. So what is happening? Price is coming down. So if price is coming down, what is happening? The peaks are getting shorter. That means supply is there, but it is decreasing. But that doesn't mean, and if you look at the green pyramids, you can see this one, and this one. So you can see this green pyramids, they are also decreasing. So what is happening when we are coming downwards? There is decrease in supply. So remember my what I'm about to say. Wyckoff talked about waves. So when waves are beginning to shorten in time and distance, or there is a increase in downward wave, at that point of time we can say there would be a trend change. So same goes if waves are beginning to shorten in time and distance, or there is increment in or there is increase in up wave. That means we can say this, there would be a trend, possible trend change or change of character can come into play. So this is the original change of character, which was later on derived by various other traders, and they labeled it in different by with an analogy of different with different analogies or different trade setups. The original change of character means when there is a trend shift. If we are going upward, the trend shift or change of character would be in a downward move, in a form of a downward trend. If we are going downwards, the change of character means, or it would apply to upward trend. So here we are coming down. There is either ways. If there is supply, or you can say downward move or downward volume is getting shorter, or it is decreasing, and price is also getting shorter in making lows. At that point of time, you can come to a conclusion that now a possible trend change is about to take place. So now, will it will it take place immediately, or will it take some time? It depends. So for that, we apply 206 version, because this accumulation and distribution come into play, or come in, or come handy to us when we assess the support and resistance level. Or either you can normally you can apply, I given another option of support and resistance. So even a support and resistance can help you in identifying this was a support as we are approaching upward. This was the volume. You can see this volume, and you see when we are here, what how much the volume is. Is it having some strength to take the market downwards? You have to understand it. You have to correlate with situation. This is something wherein we are predicting a counter trend move. Now the overall trend is downwards, but I knew at this particular point that now there is a change in behavior because we have upward stride, and then as we are approaching downwards, you can see the waves. They are decreasing. So that means the as we are not getting high demand, or uh, comparatively higher or taller, or I would use the word taller um, pyramids. It's not about taller or shorter pyramids. It's all about look at this particular support level as we are approaching to coming back to this particular level. From this particular supply, you can see this is what supply has done. So now at this particular point, and always also the size is also decreasing, or the lows are also coming closer to each other. That means there would be a possible trend change. And here we got a spring. So now here you can say now it has increased, but it is decreasing. And then all of a sudden we got a huge demand. You can see this demand is something which is greater in terms of, or if we compare, it is closer to this level. So now we are forming a bottom, one with low volume and one with great volume, higher degree of supply, because red corresponds to supply. So when we are approaching downwards, there is increment in supply, as well as there at previous level there was decrease in supply, and here also there was equally constant kind of a supply, so or average supply. But we are not going upwards, or we are not going downwards. We are not going downwards. That means this is hidden buying taking place, or smart money is, or composite operator, as Wyckoff used to mention. They are buying here. So this is a place to play, buy aggressively. If you're getting a support which has been established and which has been tested. So even if you get a buying opportunity at this particular point, I would love to be buyer and enjoy the profit over here over the period of time. You're getting my point. So this is how we normally do. We normally trade based on this one, and there is relative and comparative analysis to be done with this one. So one student asked me, though the volume is not that much, it is something which is decreasing, but I mentioned volume is increasing. I think this was the case with FCPO. This student asked me in this particular chat of 5 minutes. 1 second, let me bring up my tools. Okay. Here he asked me demand is increasing. So now why demand is increasing? As you can see, I'm doing the relative analysis. You look at this price action and look at this volume. Look at this supply. After that, what happened? Demand, you can see the recent supply demand has decreased, and now it is increasing. This is the highest demand which we can see. 1 second, which we can see over this particular point. So now I can say demand is increasing. I got a pullback kind of trade. If I apply, I guess I got a pullback to accumulation and distribution level, I guess, right? This was a breakout and then pullback, and then price went upwards. So this is how, and you can see the supply, because this is the activity. I think at this in this particular point of time there was activity. So when activity is there, volume on either side would be showing, either demand or supply both would be showing. But we have to do the comparative analysis as we are approaching upwards. As we are approaching upwards, volume is increasing. Here was the supply. Had this supply been able to take the market down, then it would have been like this. This didn't happen, so this confirmed that price is going upward. Then this one, then this, and this. So same thing happens over here. You can see, look at the supply volume. This supply, this supply, this supply. So there is no whatsoever supply to take this market downwards. So you have to give yourself time, and then later on, after that, you would be able to able to understand this thing. If I One second, if I look at the price action, what has happened over here? As we are approaching upwards, volume is what volume is doing? Demand is getting exhausted or not? Demand is getting exhausted. That means now we are about to make a waves are beginning to shorten in time and distance, as well as the demand is getting weaker, and now we can see price shifting price towards the downward direction, and it happened. Like you can see, this is change in character or change of behavior. David used to say, this is change in behavior. We trade on first pullback, short sell it over here, and this particular and for lower targets. This is how it has to be used. So I'll make this simple for everyone. Give it some time. If you want, play around with it. If you don't, if you there is another option with this one. It comes with fast wave and slow waves. So you can use fast waves, slow waves, but I recommend using fast wave because the closer the frequent waves we get according to the price action, it becomes easier for us to assess the market. Keep one thing in mind: this is increment of demand and increment of volume. As we are coming back, pullback is happening. I want volume supply to be lesser than this one. So here we supply is less. If I draw a line like this, supply is getting weaker. So that means, and all of a sudden we see pop up in volume in supply. That is red volume. So if there is red volume, why market is not going downwards? This is what my question is. If market is not going downward, that means it is about to go upward, and it happened. And that is the reason I planned my demand buying trade over here. There are two, three kind of analysis which can be done over with this one. So I don't want you people to get overwhelmed with the information. Watch this video and then shoot your questions to me. Then I'll reply back to it. Don't take this indicator lightly or don't give up on this indicator tool because it is one of the finest tool, one of the best tool that I have ever made. So even if you, again, if you fail if you face some issues with this uh, indicator, like for example, many people, they find it difficult to apply things because it makes the task complicated. So for those people, if you're not finding this tool to be uh, giving you any productive or giving you a clear-cut understanding, you can skip this tool. You can go for 201 version, which is price and volume, which is also a simpler tool which I have made for particularly for traders so that they can use it when it comes to it is simple. I'll issue the access to it for the people who have opted for this one. If it is green, that we will only look for buying opportunity. When it is red, we will only look for selling opportunity. And along with it, if you use volume oscillator, so this is good for Euro USD and XAUUSD Forex. It won't be used much like it won't be more useful for the people who are trading stocks and other things. So if you come back to XAUUSD or I'll take Euro USD. So meanwhile, you can use this thing. This oscillator also works very well, and it gives you excellent trading opportunities. When this thing is green, that means demand is there, price is going to go upwards. If this is red, that means prices are going to go downwards. If this is red, that means if volume oscillator 200 is red, that means there is no whatsoever participation from a composite operator or volume is not active in this particular time. So when green color is there, that means there is high volume activity and you can look for a trade. So even in this particular case also, your price or price oscillator has given you a confirmation that prices are going to go upwards. And this same price and volume oscillator, I have incorporated into 208 version. If you watch it, price and volume oscillator over here. So I think people might face some difficulty in using this one. So don't worry about that thing. I have made a simpler tool also for you to trade. If you're finding this thing to be complex, then you go for it. But this is one of the finest tool which I have developed over a period of time. As not I have developed this one. This was developed by David Weiss, but I know how to trade bit based on this one. So this is one of the finest tool because I want to see effort versus result or shorting of thrust or demand getting weaker and supply getting weaker so that I can plan for a buying opportunity or a short selling opportunity uh, accordingly. So I think 1 second. Oh my God, I haven't applied this thing. So sorry, I haven't resumed the share. You can use price oscillator and volume oscillator if you find this thing difficult for you for interpretation at the beginning. You have this indicator, you can learn this indicator, but ready to trade kind of situation, you can use price and volume oscillator. A volume oscillator would not be of that much benefit to FCPO or any Indian stock market, but price oscillator is universal. It can be applied to anything. When it is green, that means prices are going upwards. When it is red, that means prices are going downwards. And I would be about to launch some new indicator also, where I would be more focusing on making this as an oscillator kind of a thing, so that we can see supply and demand waves. But that is subjective again. It will if I feel like introducing it, then I will definitely do for. Or either these are the optimum tools which we can use. So I hope you enjoy this video. Please watch it again and again. And if you have any, if you are not finding this tool, because it will take time for you to understand this tool, how demand waves work, how supply works. Like for example, in Euro USD, here was a demand. This was a climatic behavior. Climatic behavior and supply. This was change in behavior, which happened over here. This is a change in behavior. We have a pullback. This was a beautiful short selling opportunity with a stop over here. So if we see, we got another second selling opportunity at this particular point. Till this time, market has given us 1:2 compared to what the stop is. So this is how it will give wonderful trades. You don't have to worry. If you have like if you this is the example you can see. This is the live example. Here I can assess volume is coming into play because we have a shortening of thrust and climatic behavior or buying climates has come to play. Now people would be asking about how you identify buying climates, this and that. That is subject something which is very, very different. It is a detailed Wyckoff course, which I would not talk about because this is all indicators. So I don't want to uh, make you confused between that particular course because that is something which is purely manual trading. So here volume has created a contribution, and here was the buy, and this much was the profit. Like if we see in Euro USD, I'm just for sake of discussion, I'm doing this because I know nobody waits till this, but till this much of profit. Only few would do who are professional traders or who like to. Now, if you see at the risk to reward, it is 1 second. It is more than 1 second. 1:222, I think. Let me drag this one. It is 1:15 or more than that. If I see, look, if I mark how the amount of or to the degree the market went in my favor after initiating trade. But we know nobody know waits till this particular point because we have already been if we are trailing the stop loss, either we would have been stopped out over here or either here. So again, it will give you good profit if you follow the rules properly. Go for this indicator or this indicator. I would be issuing the access to this one for the people who have opted for my monthly membership and this one. They can use it and they can plan your trade accordingly. Let me know about your feedback and let me know about your questions. Don't take this thing lightly because every day I would be sharing the profits, and over a period of time, uh, I think everybody in this group or people who are or in my different groups who have opted for these tools would definitely make money. Thanks a lot for watching the video. If you have any questions, you can drop me a message or comment below.